What's the word, everybody? Good to see you. Good to hear you. Ed Ponsi here, your FX educator. You're on behalf of FX Street once again. Hey, how's it going? Good day. Hi there. Hope everybody's well. Here we go once again. It's Monday, the 17th of April. Hope everybody had a good weekend. I know it was a holiday for a lot of folks. Hope everybody enjoyed the holiday. If you do celebrate the holiday, Easter, it is. Banks are open, stock market's open again in the United States. I think that's true in most places. Once again, so you know, I'm assuming we're back to business as usual in most places. Although it may be a holiday still. In some places, right? Easter Monday. So I'm not sure if it's a bank holiday or not in these countries. If it is, you know, we could see light volume. Interesting figures out of out of China last night. Did you see GDP out of China, by the way? 6.9. That was pretty high, right? 6.9 GDP, getting close to 7% again. I think you've got to say that that's encouraging. Whenever you've got, you know, second biggest economy in the world has GDP increasing, you've got to say that that can't be a bad thing. Have a good day. All right, so China's GDP 6.9% annual rate, higher than expected. And definitely on the increase, right? We've seen some good economic numbers out of China, but the one scary thing is that it doesn't really, it doesn't go at all with what's happening with the price of iron ore, which is heading in the opposite direction. You would expect iron ore to be rising if things are getting better in China, and iron ore is falling. So really mixed signals out there. This is true in a lot of areas. The yen is getting stronger. Okay. By the way, we'll get back to this in a second. This is the dollar CAD setup from Thursday. Looks like it did quite well. Somebody out there. Somebody who I think was either new in the room was asking for a setup, and we just kind of drew up a quick setup on dollar CAD, and it looks like it did really well. Why? Because the only reason why dollar Canada fell was because President Trump in the United States had said that the dollar was too strong. That did not fundamentally change anything about the dollar. We said that probably it would go right back up to where it was. So it was here, and it came down when Trump said the dollar was too strong. The dollar came down. What happened? It went right back up to where it was. Why? Because just because Trump says the dollar is too strong, frankly, the fact I'm surprised that it went down at all. It's just one person's opinion. Just because that person is the president doesn't mean that the dollar should fall. There's a lesson in here, gang. Okay. When now we had an earlier setup on dollar Canada. That setup also worked. It hit the first target. And then we raised the stop and we broke even on the second half of the trade. And then we did a second setup. We created a second setup when Trump knocked this down. We said it's probably going to go right back up to where it was. Why? Because why would it stay down? If Trump says the dollar is strong and it goes down, is it going to stay down forever? Or is the market going to move on to the next thing? The market always moves on to the next thing, sooner or later, right? There's definitely a lesson in there. The market always moves on to the next thing sooner or later. And so you could make an argument that says, well, Trump has the power to weaken the dollar. Okay, how? Well, he could replace Janet Yellen, but Janet Yellen isn't stepping down. Janet Yellen isn't stepping down until her term is over. So that's not going to work. He's going to cut taxes. He wants to cut taxes, and he wants to cut corporate taxes. That's probably going to make the dollar stronger. So he can complain about the strong dollar all he wants, but his policies are probably going to make the dollar stronger. And just jawboning, which is talking about it, doesn't change anything. Okay, so let's get back to the mixed signals issue. So by the way, if you're in this trade, just to, and again, you know, these are not trade recommendations. These are just, you know, I'm just giving you an idea of how trades can be placed. So Trump knocked this down, and the trade based sideways. And so how did we deal with this? Just for future reference, so you know what to do in the future. You could be faced with a similar situation. The trade was basing sideways. So we said, look, maybe it breaks downward, in which case there's no trade here. But we think it's going to go right back to where it was. So if it breaks upward, we'll buy it. So what did we do? We put a line across the top. And we said if it breaks upward, you know, the borderline here is 132.50. See that 132.50 was the high point, the tops of these candles. 132.25 was the low. So we put a buy order at 132.55, meaning it had to break out of this area. Now, breakout trades don't always work. In this case, it did. It breaks out to 132.55 and the buy order is triggered. The stop is 132.20. That's under this entire area. The first target is 133.00. That's a round number. Why would I put a target on a round number? I would never put a stop on a round number, right? Round numbers attract price. So you would never put a stop on a round number. Just trying to remove this. There we go. You would never put a stop on a round number, but there's nothing wrong with putting an entry or a target on a round number. You don't want your stop to be hit, and the price is attracted to round numbers. So you would never put your stop directly on a round number. You would always put your stop past a round number, beyond a round number. However, an entry or a target, putting that right on a round number, there's absolutely nothing wrong with that. That's perfectly okay. So in this case, we put our target directly on a round number. You can see once the breakout occurs, looks like the breakout occurs just before noon. Our meeting here, this is New York time, this is East Coast time. Our meeting here was, I believe this was around 9 a.m. So the breakout occurs about 2 hours after our little meeting here. And the price just roars. And it just goes to show you, I really wasn't expecting this to go. because we were heading into a big holiday weekend. When I say a big holiday weekend, what I mean is it's not just a holiday in the US, it's a holiday in many places around the world. So I really wasn't expecting too much. But the market is always surprising, you know, even for me. I very frequently am surprised by what happens. I really wasn't expecting a big move to happen right away, but there it goes. It hits the first target. When the first target is hit, stop, right? We close half the trade and the stop comes up to break even is how I like to manage it. And now we're sitting on a profit in half the trade, and the second half of the trade is still alive. The second target has not been hit. And so we're halfway out of the trade. We've got some profit in our pocket, so we feel pretty good. We've raised the stop, so we've removed the risk. And we're feeling pretty good. Right? Feeling pretty good about it. So, you know, the one good thing about taking half of the trade off of the table is that it makes it much easier to stay in the trade psychologically. You take half of the trade off the table, it's like half of the weight is taken off of your shoulders. Psychologically, this makes it much easier to stay with the trade. So to whoever was asking for the trade of the week last week, this was for you. Right? The stop is now the same as the entry point. The stop is now 132.55. Okay. And this target has now been filled. Right? So that 133 has been filled, and this target is still alive. So there we have it. There's your update on the so-called trade of the week. We actually had a really good week last week. Pretty much every setup that we put together made it at least to the first target. So in fact, all of them made it to the first target, but none of them made it to the second target. That just shows you what kind of week it's been. It's been a low volatility week. But it's funny, just when you think the week is over and the volatility's over, boom, big volatility move, right? That's a big increase in volatility right there. That dollar CAD jumps 100 pips. So, you know, you never know what you're going to get. And I guess that's what makes it interesting. Okay, so we were talking earlier. This is the interesting juxtaposition. Look at dollar yen going lower and lower. When I see that, I would expect this also to be going lower and lower. It's not. This is the S&P 500. This is the S&P futures. But they're not going lower and lower. They are, however, you could argue that they're forming a double top. It's kind of hard to argue with that. That's a little bit scary looking. So the problem is, you know, you also look at it's not a huge double top. So it's not, I wouldn't call it tremendously bearish. I think maybe you would have to look at this and say, wow, it's really been preceded by a tremendous run. That's a 500 point run from the beginning of 2016 until now. That's a very big run, and so very big runs can lead to big sell-offs. It can happen that way, right? But that's not a big pattern. If you measure the pattern, and just keep in mind, whenever we talk about measuring a pattern, measured patterns is using measured patterns is a very simplistic way of doing things. We still do it, but just you got to take it with a grain of salt. Measuring from here, that's about 23.95 to here. 23.25, 70 points. 23.25 minus another 70 gives us what? I'll ask Siri. 23.25 minus 70.
255.
2,255, according to Siri. That's right here. That actually makes sense on a couple of different levels. Because why? It's not just the measured move, it's also a big support level. I can get behind that number because it's a big support level from early this year. The measured move on the S&P is also support. Now we're talking. Let's throw some moving averages up there. Let's just see if there's if the 200-day moving average is sitting right there, then I'll be happy. It's not sitting right there. It's close. It's close, but it's not right there. It's interesting that we are under the 50-day moving average, though, on the S&P 500, S&P futures, I should say. Anyway, we are under the 50. You use the measured move and you use support and resistance. It looks like we could be heading to there. Now, this feeds fuel to the fire to say that the yen pairs could be about to move lower. This is moving lower, dollar yen. And of course, in this room, we've been paying a lot of attention to Aussie yen. Aussie yen should have probably gotten a boost out of the China numbers. But I don't believe it didn't really carry through. Aussie in general should have gotten a boost out of these China numbers. China GDP last night. But I don't think it really carried through. We've been talking about this one quite a bit lately, about how Carlos is in the room. We were talking about this one, how we were both talking about how we want to short this if it comes up, but it's a little bit frustrating. It just doesn't come up. That's okay. I do see that big green candle here. This was on the Australian jobs report. We had that big green candle. But we didn't really get too much play out of the China jobs number. And I think we were also looking at Euro Yen maybe. Yeah, look at that. Just look at it. Just nothing but red candles pretty much. Right? And we were talking about maybe the 10-day moving average on this one. So we keep looking at these. I'm almost afraid to stop looking at them because, these are the ones where the moment you stop looking is the moment that they start working. So I want to keep them forefront. But we're not going to spend much time. We're just going to take a peek. We're going to look here and there, and then we're going to move on. And New Zealand yen. We said this was one of the more, this one has a lot of continuity to it. And it's not very far from the moving average. And we said a nice hit right here. And it's not far at all. This one could give us an opportunity sometime in the near future. Take a look at, let's go to the Aussie USD. This is definitely getting someplace. So good economic figures, both in the hint should have come last week on the jobs report, one of the strongest jobs report in a long time out of Australia. Should have given us a clue that things were improving in China. And then we saw a good GDP report out of China last night. So we're beginning to see some lift here in Aussie USD, 4 consecutive green candles in Aussie USD, beginning to move. So this could be something that we may want to start buying dips. It's interesting also that support played a role. Whoops, down here in the bottom, down here. But now this looks like it could start to gain some momentum. So Aussie, you've got jobs and gold too. Check out gold. Gold's just taken off here, getting really close to 1,300. You're beginning to see some gaps, and traders are beginning to get excited about gold a little bit. When traders start to get really excited about gold, and remember we said they don't get excited about copper, but they get excited about gold. When they start to get excited about gold, there's an interesting phenomenon that seems to happen where silver will begin to get left behind, and then if gold really takes off, silver will suddenly catch up. And this becomes an interesting play in itself, like the spread between gold and silver. Let's see what's happening with silver. But gold getting really close to 13. I'm holding GDX, which is the gold miners, and that's doing very well. That's just a steady climb here. Silver might be the play also. Silver's beginning to climb, but it's climbing more slowly than gold. But if gold really takes off, there's a tendency for silver to lag and then suddenly catch up. So if the metals are moving, Australia tends to be a big beneficiary. There's a big rounded top that we drew on copper. And now, what do we begin to see? Instead of breaking down, we're starting to see green candles. Maybe I drew that a little too soon. Let me take that off for now. We can always put it back on there. But copper, let's put it this way. If the other metals are rising, pardon me, allergy season. If the other metals are rising, it makes it a little bit harder for copper to go down. Metals have a tendency to run in a pack, and that can happen. So if gold and silver are moving up, copper doesn't have to go up, but it can, and it's more likely to move up than not. Okay. All right. Thanks, Carlos. Carlos says, bless you. Thanks. You know, I whipped off the headphones so quick. Those allergy sneezes happen fast, you know. So I whipped off the headphones very quickly, trying not to sneeze in everybody's ear. So I hope it worked. I sneeze really loud at this time of year. Sorry. Okay. All right. So anyway, so congrats if you were in on the dollar CAD, or even if you just learned something on the dollar CAD. Just to review very quickly. Let's see what's up for today. We've got some economic figures coming out in just a moment. Empire Manufacturing just hit 5.2. Let's see if it's moving our market at all. Euro USD. I'm going to throw it on the 1 minute here. We'll see if there's any type of response. Probably not. Empire Manufacturing is Empire State. That's the New York State. And manufacturing, so it's really upstate New York. You know, there's no factories in New York City, but upstate New York, places like Rochester and Syracuse, et cetera, that area, there tends to be a lot of factory activity up there. 5.2, that's worse than expected. So you would think that's dollar negative. You would assume that that's dollar negative. And, but I don't know if it's really that important. You know, it's like a 2-pip move. Nothing to get excited about there, folks. Nothing to get too excited about. So anyway, just a quick recap on where we're at. By the way, China retail sales came in pretty good, 10.9%. But you know, the numbers out of China are always big numbers. Like they always seem ridiculously high. What do we have coming up? Nothing really all that interesting. Just some T-bill auctions, National Association of Home Builders, Housing Market Index. Funny thing about, I think you could be in the U.S., you could be about to see a lot of home building activity. Prices of houses are moving up in the U.S., but what I continuously hear is that prices are moving up because of a lack of inventory. So I would imagine that this means that we're going to have to create more inventory at some point. So and at the same time, you have everybody's saying, well, the malls are there's too many malls, and malls are closing, and stores are closing. So I would imagine that what are you going to do with all these malls? If there are too many malls, what are you going to do with them? You know, I would imagine you could knock some of them down and put up housing developments, right? It would seem to be the logical thing to do, right? I mean, they tend to be in geographically desirable areas, right? You put a mall in a place where everybody can get to it. Well, shouldn't a house be in a geographically desirable area? Wouldn't that make sense? And how hard would it be to just knock down that mall and put a bunch of houses there? It seems to be the next logical step. So if there is indeed, I don't want to say a housing shortage, but if housing prices are rising due to a lack of inventory, and if there are too many malls, that just seems to be the next logical step. So, you know, I don't know how long is it going to be, but, you know, we have 2 malls within 2 miles of where I'm sitting right now. We could get by with 1, you know, and I don't see why you know, I'm sure that's true of a lot of folks. And why? Because all this shopping is being done online now, and it makes, you know, it's just, you know, I don't think it's anything to fear. People are saying, well, it's, you know, it's Armageddon. No, it's not. You know, nobody needs all these stores. Nobody needs all this stuff. It's too much stuff. It's too many stores, and people are buying stuff online. So it's just, it's just the next logical step is start getting rid of some of these stores and replace them with houses. And so that'll solve two problems at once. Okay, online malls, exactly, right? Online is one big mall, and it never runs out of space, and there's no rent, right, to having an online mall, online store. And the thing is, I didn't realize, I always thought, well, you had to, there are certain things that people will never buy online, like clothes, but young people buy their clothes online and everything. They just order 6 shirts and send 5 back, and it just never struck me. Like, I have to try my shoes on before I buy them, and I have to go to the mall and put on shoes, and it just never occurred to me that there are people who are just going to order 3 pairs and send 2 back. It just never occurred to me. But okay, I guess that's just the way of the world in 2017. Okay, gang, I'm out of here. I'll see you back. Let's go back here in 30 minutes. We have a bunch of charts we haven't gotten to yet, so we need to do a few setups. So please come back in 30 minutes. Thank you so much for listening. I'll see you back here in 30. Everyone, thanks for listening.